Back home, the government may argue that banks have enough liquidity to lend, but the flow of cash to core sectors of the economy is still slack. In fact, banks are now arguing that they need tax incentives to help spur lending to infrastructure sectors, a demand that is being considered as part of the government's broader package to boost infrastructure growth.
Banks may have enough money in their coffers, but the flow of cash, especially to infrastructure companies, still remains slow. Now, as the government prepares a package to help boost infrastructure growth, banks have asked for tax concessions to incentivize them to lend. In a proposal sent to the government, banks have asked the government to exempt income from infrastructure lending for taxes. Bankers have revived this long-standing demand that tax concessions under Section 1023G be brought back after being withdrawn in 2006.
Particularly the long-term funds from the international standpoint is also kind of stifled. So there must be alternative, more innovative ways of getting more cash out to these projects.
While chances of a tax concession will depend on the government's own fiscal concerns, bankers have also appealed to the RBI to make it easier for them to lend to infra projects. Banks want the RBI to increase the single borrower and sectoral lending limits for infrastructure sectors like power and oil and gas. Bankers argue that since many large PSU banks have reached their lending limits, the flow of money to large infra projects has slowed down. While suggestions on ways to spur infrastructure growth are pouring in, the government is still to take a final call. But experts warn the government should finalize the plan sooner rather than later, before election season comes along and makes it increasingly tougher to take tough decisions. In Mumbai, Ira Dugal for NDTV.